Okay, welcome everyone to today's webinar. Glad to have you here at Mazuma. I'm glad to be able to provide some good information for small businesses of America out there. My name is Ben Sutton. I'm a CPA and founder here at Mazuma. We opened up 9 years ago with the mission to help the small business. So I also am a small business owner, sitting right in your seat, wearing your shoes. Happy here living in Utah with my wife and 4 kids. Today's webinar is about tax season, and we're really going to cover a very broad range of topics. Not going to go super deep, but we're going to cover a broad range. We're going to discuss quickly important deadlines, and then we're going to move on to the important documents that you should be gathering and have at this time of year. Also, some important deductions that you don't want to miss. And then what you should be doing to stay on top of things going forward. Okay, so you can stay organized and keep your business finances together and in order. All right, so let's start with deadlines. For S Corps and multi-member LLCs, the deadline for the IRS is earlier than the rest of the entities and for us as individuals. So since these are pass-through entities and the information that's required when you prepare an S Corp or multi-member LLC tax return is given to the people, the owners. You prepare those tax returns, then you take the K-1 and give it to the owner so that they can prepare their tax return. Right. And so because that information is needed for the owners to prepare their personal tax return, they require an earlier tax deadline for those entities. So the deadline for S Corps and multi-member LLCs is March 15th. All right. So single member LLCs and sole proprietors the deadline is a month later, April 15th. And for C Corps, which also file a separate tax return, they are required to be filed by April 15th as well. So we've got S Corps, multi-member LLCs on March 15th, single member LLCs, sole proprietors, individuals, and C corporations, the deadline is on April 15th. Okay, so month apart there. If, of course, you're coming up to either one of those dates and aren't able to file on time, the IRS provides the way to file an extension, right? You may have heard of filing an extension before. When you file an extension, it extends your filing deadline by 6 months. Okay, so if I had a March 15th deadline for S Corp, I would now not have to file until September 15th. And likewise, if my deadline on my personal tax return is April 15th, if I file an extension, I don't have to file my tax return until October 15th, which is nice. A lot of times information is still being gathered, especially as a small business owner. Sometimes the records are hard to just get together. And if you've been behind, that's what these extensions are for. And it's important to know that these extensions, when you file them and get that extra time to file, it's not an audit flag, all right? It's very, very common for an extension to be filed. So you don't have to stress about filing an extension and thinking that the IRS might think that you're doing something wrong or something. So it's just they give you that extra time if you need it to get the records together. Of course, it is nice to file on time just so it's done and over with. Couple important things to remember about extensions is that you're not extending or delaying the time that you have to pay. So technically, the April 15th deadline still is the deadline for payment. And if you file your tax return later and you actually owe money, then they're going to penalize you for not paying what you owed back on April 15th. All the penalties associated with tax returns is based on what you owe. So that means if you don't owe anything, and then the tax deadline is pretty much irrelevant to you, right? Because you can file much later, and if you don't owe anything, there's no penalties or interest involved. So don't worry about filing an extension. I mean, don't stress about it. If you're coming up to the deadline and you're not going to be able to make it, definitely file that extension and just buy yourself some extra time. If you end up owing, there will be some penalties. They're not going to be big penalties. Okay, so you don't need to worry too much. What you don't want to do is go past the filing deadline and not file an extension, not do anything. So make sure and either get the return filed or get an extension filed. Okay, let's move on to the important documentation that we're going to discuss today. You receive a lot of information from outside entities in the mail that is often required for you to prepare your tax return, right? You might be familiar with some of these forms, these external documents that are coming from other people to you so that you can file your tax return. 1099s, 1098s, which reports the mortgage interest. 1099s report the income from customers or from like brokerage accounts. W-2s, of course, you need to file, that information you need in order to file your tax return. 1095s, which are the health insurance documentation, proving that you had health insurance all year long or if you received a subsidy, as well as like HSA contribution or distribution documents, student loan interest, retirement plan transactions like contributions or distributions from retirement plans. All of those documents you kind of need to wait for and get from those outside parties so that you can make sure and report the accurate information on your tax return. Those documents that those outside parties are sending to you, that the banks are sending to you, that your customers are sending to you, they're also sending a copy to the IRS, which means the IRS is going to have that information in their system. So if you file a tax return without that information, the IRS is going to send you a letter asking about it. All right, so you want to make sure and get those external documents in the mail, or maybe you download them online, depending on how they send it to you, before you prepare your tax returns. The other type of documentation is internal, right? Like internal to your business or your personal life, things that only you know about. So maybe medical expenses or charitable contributions are often things that are not always being tracked by those outside entities, or if they are being tracked, they're not always sending you a statement at the end of the year for tax purposes. So those are things that you need to keep track of and produce so that you can put those and get those deductions on your tax return. Of course, the other records and information that's needed at tax time is the income and expenses from your business, right? So if you run a small business, it's your job to keep track of all of the income and the expenses in a profit and loss statement type format so that information can be taken and put onto your tax return and reported. Now, the IRS isn't necessarily going to know about that income and expenses unless that income is reported to them on a 1099 somewhere. So it's up to us as citizens of our country to report the income that we make, but also to report all of the expenses and deductions that we incur as well, right? So we definitely don't want to overpay taxes. The IRS isn't going to get any record of our expenses, all right? They only get records of our income. And so that's what Mazuma is all about, really, is keeping track of all those expenses so that we can reduce the amount of income that we have to report on our tax return and reduce the amount of taxes we have to pay. So income and expenses from business activity. The other income and expenses that often are kind of lost in the ether or whatever is those relating to rental properties. Okay, so if you've got a rental property and maybe don't have a manager managing your rental income and expenses for you, then you've got to record how much income you received, how much expenses you incurred. You're supposed to record those throughout the year so that can all be summarized and reported on your tax return at the end of the year. All right. The last little new item that I'll mention that's becoming kind of big and that the IRS is focusing on is virtual currency transactions. The IRS has begun to track, the transactions in Bitcoin and other types of virtual currency, and they will send you a letter now if you're not reporting those sales of Bitcoin or the virtual currency on your tax return. So if they will basically the vendors are sending the IRS 1099 showing all of the transactions, and so they're expecting you to report those transactions as well. Lots of letters going out on those, so definitely report those if you have them. Moving on now out of the documentation area and on to some deductions that you don't want to miss. In our other webinar, we've gone over general business deductions and kind of taken a deeper dive into all the different deductions that are available to you. Here, I'll just mention a few that maybe sometimes get left out of the bookkeeping, and so that you want to make sure and catch and add into the tax return, but that aren't usually recorded in the bookkeeping anywhere. And the first one of those is mileage associated with your driving your vehicle. Okay, so you might be taking the mileage deduction because you drive your vehicle for your business. Those miles aren't necessarily recorded in your books, right? They don't show up as an expense because you're paying for gas. Maybe you're using your business card to pay for the gas and maintenance and repairs of your vehicle, but the mileage doesn't show up, and the mileage is often a larger deduction, and so you want to grab the number of miles out of your app or however you're tracking those miles and report those as well on the tax return. The next item that I'll mention business-wise is any transactions where you used your personal funds to pay for business expenses, right? So like here at Mazuma, we're reconciling your business bank account, line item by line item, penny by penny, and capturing all of the deductions that run through your business bank account. However, if you've paid for anything out of your personal account, or maybe you've used a personal credit card where you get points or something, you swiped it for a business expense so that you could get the points, those personal funds that were used are still a business deduction if it was used for business. So we want to make sure that at the end of the year, we're capturing all of those transactions that happened over here in the personal accounts and adding them onto the business tax return and putting them into the business books for the business tax return. All right. A couple other major deductions that you definitely don't want to overlook for your children, right? Those kids take a lot of work, a lot of money, might as well get the tax benefit for them. So there's a nice big $2,000 tax credit for the kids under 17, as well as if you are paying for daycare or child care during the day, then you can, and both of maybe you and your spouse work, you can get a significant tax credit for that as well. So that's some information you want to gather to get tax deductions. Your mortgage interest, your property taxes, charitable contributions, those are all great itemized deductions that should be factored in when preparing the tax return. And lastly on that list would be medical expenses if they are significant. Medical expenses kind of get slashed. They have to exceed 7.5% of your income before they start going towards your itemized deduction. So it's kind of a hit that we take there, but if you have a big year of expenses, medical expenses, then that can definitely help you out. All right. So that's a quick, brief overview of deductions. Going forward, in order to stay organized, and you want to make sure that your books are organized. Bookkeeping really doesn't always become critical, and I'll admit this, even though Mazuma is all about the bookkeeping. sometimes it's easy to feel like the bookkeeping isn't so critical during the year. All right. And so it's easy to kind of just pay for stuff with your business account and not do any accounting or bookkeeping throughout the year. But you're really missing out on a lot of good information that can help you run your business. And you're also kind of creating this tidal wave that is going to come crashing down towards the end of the year when it absolutely has to be done for tax purposes. All right, otherwise you're going to be paying too much taxes. So keeping kind of rule number one is keeping your business bank accounts reconciled on a monthly or quarterly basis. All right, so that everything is tracked and buttoned up and recorded and accounted for on a monthly or a quarterly basis. And as I mentioned before, making sure that those business accounts that we are reconciling monthly or quarterly are separate from the personal accounts. All right, so that those business accounts only contain business transactions. Now it's easy, yeah, sometimes personal things will slip in there. A few things here and there is fine, but your general rule needs to be I pay for business transactions with my business card, I pay for personal transactions with my personal card, and I keep things separate. I can transfer money back and forth, but as far as the regular expenses, I keep those separate. So that you'll wipe out a lot of headaches just by doing that simple thing. So the next thing I would say, along with that, and staying organized and as you move forward throughout this year, is to review your financial statements, your reports, on a regular basis, monthly or quarterly at the very least. Just look at your income statement, okay, and look to see how much income you've generated in your business, and then look at all the expenses and see where you've spent your money. All right. If someone is doing your accounting, this profit and loss statement should be available to you. Of course, we make that available to all of our clients. That's one of the key pieces that we deliver to our clients, an income statement, so that you can see just that: how much income I've earned, how much expenses I've incurred, how much I've paid for, and where I've spent my money during that month or that quarter or that year. All right, that information is very valuable. It starts to bring you in line, your mind in line with your business, and helps you see what's actually happening. And it kind of is a springboard for you creating a budget for yourself, right? So if you're looking back months in arrears and saying, okay, I spent this month, I spent $500 on marketing in January, and my sales were this much, and then I spent $1,000 in marketing in February, and that made my sales go up to this. Oh, and so you kind of start to see how where you invest your money affects your sales, and then you project that out into the future, right? And you create a budget for yourself that helps you see and plan for the future, and kind of gives you something to work towards. And then each month, as those the months go by and those new income statements are generated based on us reconciling the bank account and categorizing everything for you, you can see how you did in comparison to your budget, right? And that process of holding yourself accountable and understanding where you're spending your money is going to do wonders for you as you move into your business and try and grow your business. All right. Lastly, as far as staying organized and going forward off on the right foot, is having a conversation with someone who knows something about taxes, right? A tax professional, a CPA, or someone who can help you know kind of what your situation's looking like. All right. So, or may be able to answer tax questions for you, right? It's incredibly valuable to have that information during the year instead of after the year's over, because once the year's over, then all is kind of said and done, and you're approaching the deadline when you might have to pay a tax bill. It's so much nicer to maybe 6 months before the deadline, before the end of the year, get your tax questions answered, get a tax plan together that projects what your tax liability is going to be come April, so that you've got 5, 6 months to plan for that, right? Or to talk to someone about how to get that tax bill down. Some strategies you can do maybe before the end of the year to decrease your tax bill instead of just accepting it as it is. All right, so here at Mazuma, we obviously strive to provide that plan for our clients. Our Business Basic plan subscribers get general tax questions answered. Our Business Plus clients get a tax plan with a tax professional where they spend half an hour to an hour going through their specific situation and projecting what the tax liability is going to be, discussing kind of these 4 pillars of areas where we can decrease your tax bill. And that all comes with our Business Plus plan, obviously. But either way, get your tax questions answered, touch base with a tax professional. And I'll just throw out these 2 major rules that you should have in mind, that if you're doing these 2 things, you're at least in the ballpark of paying as little taxes as possible. 1, make sure your entity, you've chosen the proper entity, whether you should be an S Corp, a C Corp, or just a regular LLC or sole prop. And 2, make sure you've got a system for capturing all of your business transactions. All right, so someone needs to be doing the accounting for your business, whether that's you or us. Somebody needs to be capturing all of your business transactions for you. And that includes setting up a business bank account and running them all through that so that those can all be captured and reconciled into an accounting software so that the income and expenses can be recorded and properly reported on the tax return, right? So those 2 things, make sure you've got the proper entity set up, which we can help advise specifically with our Business Plus clients. We do a full evaluation of whether you should be an S Corp or not. And 2, set up a system for recording all of your business transactions. Okay, and of course, Mazuma's system, our accounting software, is set up to do just that. All right, so let's say you've kind of got all the records together and it's time to start preparing a tax return. All right, there's kind of 3 main approaches that we see small business owners taking to get their taxes done. 1 is the pure DIY, doing it yourself. You've got the bookkeeping software, you're entering each of the transactions into the software, categorizing them properly, reconciling the bank account in the bookkeeping software, and kind of doing that for the whole year, right? Then next step, get yourself tax software and input all the information from the bookkeeping software into the tax software properly, and then pulling in your personal tax information and putting that in the tax software and doing it all yourself, right? And those softwares, it can be enticing because they're not super expensive. But I'll tell you, the headache that's involved is significant, but it's certainly one way to do it. The next approach to getting your taxes done is kind of a hybrid, where you can do the bookkeeping yourself throughout the year. Again, buying the bookkeeping software yourself, entering all the transactions, reconciling the bank accounts, and having your income statement presented properly, and then giving that to a tax professional and having the tax professional do the tax return preparation. So instead of you doing both the bookkeeping and taxes yourself, you're doing the bookkeeping and then having a tax pro do the tax returns for you. That option is all right, of course, too, if you don't mind the headaches of the bookkeeping, and if you're okay with there being kind of this gap where the tax pro is just relying on everything you did in order to prepare the tax return. You just got to make sure your bookkeeping is is solid in that scenario, right? Because the tax pro is just going to assume that you did it all right. That can save you a little bit money, although for what you pay for to get the taxes done, you'd be surprised how much you pay just for a business and a personal tax return. It can be close to $1,000, and so cost benefit wise, you just have to weigh that out. Of course, the third approach is where you outsource everything, and that's the Mazuma model, where we do all of your bookkeeping through and all of the data entry. We're entering it all into an accounting software. We're setting up the accounting software for you and reconciling your bank accounts and getting everything organized and presented in the income statement format. And then we are taking our own work after you've reviewed it and kind of verified it's, that it makes sense to you and that it's accurate. We're taking our own work and putting that in the tax return software exactly how we know it should be. And there's a lot less guesswork involved, right? And the cost associated with that is often lower. That's kind of what we've lower when you factor in your time associated with bookkeeping. Also, obviously, we've kind of built this efficient system that if you're doing your bookkeeping with us, then we can do your tax return very simply, right? And so we don't charge anything extra for the tax returns as a result if you're on our Business Plus plan. So once again, Mazuma is kind of the do-it-all for you, system. We're doing your bookkeeping. We're providing the tax planning and advice with our tax professionals. We're preparing and filing your federal and state tax returns. For business basic clients, we're doing that for just the business tax return. Business Plus clients get both the business and the personal tax return. And those are all provided for a flat monthly fee, right? And so we'd be happy to help you out if you're currently not using Mazuma's system, but that's kind of how we work. All right, so we've kind of come to the end of our session here of everything that I've covered. You feel free to submit your questions in the Q&A section of the screen. I think there's a Q&A button down at the bottom of the screen that you can submit questions, and I'll be happy to answer those for you. So starting out, we've got a question here. It says, what are the common errors you see on business tax returns? Okay, well, that's a great question. It's very common that clients, if they've done their own bookkeeping or prepared their own tax return, it's very common that clients are miscategorizing payments, like loan payments, for example. Maybe when they receive a loan from somebody, or they'll record that as income. And then when they're making payments on that loan, they'll record the payment as an expense, for example. So that's a very common error that we find. Other errors are maybe mistreating capital asset purchases. So if you buy a car or other piece of equipment or a large sign or something, you're required to report that as a fixed asset and then depreciate that off in order to get the deduction. That's something that is often overlooked on business tax returns, is the depreciation, that deduction, and reporting that properly. Miscategorization is probably the other major area that we find in business tax returns. Frankly, we don't see a lot of clients preparing their own business tax returns. I would 95% of the time, it's a complex enough procedure. In fact, the software that's available to do a business tax return yourself is super expensive. So we often don't see clients preparing their own business tax return. Okay, let's move on to the next question here. I see this one says, with the Business Plus plan, or both spouses have a sole proprietor business and they file together, would both businesses be included in terms of tax preparation? And the answer is yes, they would. If we're not doing the bookkeeping for one of the sole proprietor businesses, then we will expect the bookkeeping to be presented all done. right? And if the sole proprietor business that we're not doing the bookkeeping for is all prepared, nice and neat, and it's all done, then we can just throw that onto the personal tax return and wouldn't charge you anything extra for it. Okay, next, what is the best way to keep track of receipts and potential deduction records? So, great question on receipts. The information that is on a receipt is typically on the bank statements, right? If you think about it, the receipt shows the date, the the vendor that you purchased something from, the amount that you paid. All of that information is on a bank statement when after the transaction occurs. So if you set up, so my first note, I'm going back to this setting up a business bank account. If you set up a business bank account, then essentially you eliminate the need for having to keep receipts, right? Because all that same information is contained on the business bank statement. Now, the little disclaimer to that is that if there are transactions that are out of the ordinary for your business, or maybe extraordinarily large, or just don't seem like the normal type of deduction that your business would incur, in that case, extra documentation like an invoice or a receipt that backs up the business purpose of that transaction is good to have on hand. Otherwise, the bank statement itself kind of acts as that record. And so even in an IRS audit, if your business transactions are all contained in a bank account and they represent normal business activity for your business, there's no need to have that transaction in there and a receipt behind it. But that said, maybe you don't have a business bank account set up and you want to keep receipts to record or to keep track of what transactions are business related, right? So you're using your personal bank account, and then the receipt, whenever you swipe a business transaction, the receipt becomes kind of your record and way of separating that business transaction from all of your other personal activity showing up in the bank accounts. So holding on to that receipt, scanning it in, uploading it to a document storage service. Of course, Mazuma takes receipts if necessary in cases where personal funds are used. You can upload it and save your receipts digitally. That's usually the best way to do it, and just keep them organized so that at the end of the year you can go through each one and have that record. Okay, next question. Another question about the Business Plus plan. How much is the Business Plus plan? When would we need to upgrade by to have our personal taxes done for 2019 or for 2020? Great question. So Business Plus plan is $180 a month. And so if you're signing up now under Business Basic and want to upgrade to the Business Plus, then we would go back and charge you a one-time flat fee for the personal tax returns for the prior year. And that's a one-time $300 fee. However, once you upgrade to the Business Plus plan, you are committed to it for a year. Okay, so we don't allow you to kind of bounce in and out of the Business Plus for that obvious reason, because we're discounting that initial charge for the tax return and allowing you to get the personal tax return included. But we also want you to get the benefits of the tax planning and of the monthly bookkeeping that higher level of service that comes with a tax professional at your disposal and with a assigned bookkeeper to your account. So the additional resources that is required to bring all of that forth, we can't allow you to bounce into the Business Plus and bounce it back out. So for 2020, the same thing applies. We would back charge you, depending on how far into 2020 you are, if you wanted to upgrade to the Business Plus and get all of the tax planning and the personal tax return involved with that. Okay, next question. I officially filed for my LLC, started my business in July 2019, but got quite sick soon after, so haven't really got started. Trying to get all the business startup done, so have expenses but no income yet. I'm really not sure how to go about the whole bookkeeping tax thing as I'm just getting back on my feet. Can Mazuma help walk me through it? We absolutely can. And you bring up a really good point. Even though you haven't started earning income yet, you definitely still want to track those expenses that you incurred in 2019 and report those on your personal tax return, right? Or on a business tax return, because even just because you didn't earn income doesn't mean you didn't have business expenses, right? And so you're able to take those deductions and those write-offs in 20 as part of your 2019 taxes and drive down your taxable income. You can decrease your W-2 income actually for those expenses by reporting that properly on your tax return, and probably increase your tax refund. So definitely it's worth capturing all of those. And yes, especially if you sign up for our Business Plus plan, you'll get a tax professional on the line who's able to assess your full situation and spend the time with you making sure that we've captured everything. But the main thing is that we are going to want to go back and record all of their business transactions, all right, that happened in 2019. And so that you can get credit for those on your 2019 tax return and get that reported on the tax on your 2019 tax return. All right, so getting in touch with a bookkeeper here at Mazuma would be the best way. You can chat in, and a bookkeeper will be there to help you if you're on the business basic plan. Or even on the business basic plan, you can set up a brief call with a tax professional and get some questions answered, and they can get you oriented if you need it. All right. How do we upgrade to the Business Plus? You can call, you can email. In the dashboard, you can initiate a chat and make the request there. We're always happy to help you upgrade. So any one of those channels is the way to do it. We're working on our dashboard and improving its functionality. Currently, there's no place to even enter your a new card information or to change your subscription directly from the dash. So you will need to email or contact us via phone or chat from the dashboard. All right. Well, it looks like that's all of our questions for today. Thank you very much for joining us on this webinar. My deepest hope is that it helps you, that it maybe gives you some thoughts about questions you didn't even know you had, or information that maybe you were looking for and that we're able to provide for you. Our goal is to be super transparent here. We're not trying to withhold information or intimidate our clients, trying to deliver the information that our clients want, and also provide that to people who aren't clients as well, as these webinars are open to everyone. Okay, before we wrap up here, it looks like we do have one more question coming in. It says, if I have a single member LLC, do I have to do both a personal and a business tax return? The answer is no, but you have one tax return, the Form 1040, but within the 1040 form, there's a Schedule C, and that is where you report the activity from your single member LLC. All right, so one tax return, but you have to fill out the Schedule C in the 1040 tax return for single member LLC activity. All right. Next question, another question came in here. What if quarterly income taxes are not filed on time? So quarterlies can mean two things. One is payroll. So if you're running payroll for your business, then you have to file and pay quarterly taxes. I'm going to assume that we're not talking about that. If those aren't filed or paid on payroll taxes aren't filed and paid on time, then there will be penalties. You absolutely can't get out of those. Those penalties will be racked up quickly. And so you want to get that done as quickly as possible. The other type of quarterlies, though, that I hope we're talking about here is quarterly estimated payments. We all know, or maybe we don't know, but we should know that as a business owner, you're generating income, like I said earlier, that the government doesn't always know about, right? So there's no one hovering over you to withhold taxes from your income and to remit it to the IRS like they do with a W-2, right? If you're an employee, your employer is required by the IRS to hover over you, withhold taxes, and send it to the IRS without you even having any choice about it. But as a business owner, you're generating income that the government doesn't know about. So there's no one over, that can force you to pay those taxes. But they do have an expectation that you make a quarterly estimated payment of your income taxes. And so if those aren't paid on time, then there's a small penalty. It's like 0.5% of how much you owe at the end of the year. It's not that simple, but it's the smallest penalty that the IRS charges, and you're likely not going to notice it a big deal or significantly. If, for example, I'm just going to throw out a scenario here. If you prepare and file your tax return here in March or April, and you end up owing $5,000 on your taxes because your business generated this income and you didn't pay quarterly estimates. So since you didn't pay in throughout the year, you owe taxes, right? And let's say you owe $5,000, you might have an estimated payment penalty of a few $100. All right. So don't stress out about not making quarterly estimates. If you're making big money, then that penalty obviously grows, and you should get those quarterly estimates in. But if this is kind of a new thing for you, and you think you might have had to do it this year, but don't stress. Just get the taxes prepared and filed, and it's going to be small. The penalty is going to be small in comparison to how much you owe. All right. Okay, I love these questions. Thanks for continuing here. Next one says, if I did photography in a different state than the one I live in, I did all the editing from my state, how do I have to report that? How do I know what city and state paperwork I have to file? That's a good question. Photography, and this really pertains to two things: state income taxes, right, as well as sales taxes. Photography is sometimes subject to sales tax, just like when you're selling, books or anything, and you have to collect sales tax and then remit that sales tax to the state. Photography is sometimes subject to state sales taxes as well. So if you are traveling into a state, performing the work there in that state, then you may have to collect sales tax in that state. That's I don't really want to opine on the sales tax situation there, but there is also an income tax consideration. So because you are going out of state and doing the work in that state, you probably do need to file a state tax return for that state if the income is significant. So if I travel from Utah to California and perform, let's say, $10,000 worth of photography services, then I need to prepare a California and a Utah state tax return when I prepare my annual taxes. And I need to say $10,000 of my business income was earned in California, and then say the other $30,000 was earned in Utah. And so that's called apportionment, and it's allocating the income between the two states, and it creates a ratio in the tax return where you pay a little bit of tax in California and a little bit of tax in Utah. How that's actually done in the tax software is, it's complex. That's one of the more complex areas of a tax return. Um, so I would suggest getting some help with that. The city, you mentioned city and state. So city, you must be referring to sales tax. And so, uh, it's the type of thing where if you're not traveling into this state or this city consistently, and this happened last year, and it wasn't a lot of money, you should really consider whether or not it's worth your time to go back and collect sales tax and remit it. If you didn't collect any sales tax from the customer when you did that work, then you're probably going to be able to fly under the radar, even though you probably, next time you do that, you should definitely get registered in that state and collect the sales tax you're supposed to and remit it to the state and city as necessary. But that sales tax issue does get kind of complicated. So, all right, here we go. I've heard that your own therapy is a tax write-off for a therapist. Is this true? So the IRS's definition of a write-off is that the deduction or the expenditure is ordinary, meaning it's common for other therapists to be spending money on. So if it's ordinary that therapists go and get their own therapy, then that would say check mark yes for a deduction. Second, is it necessary? Is the other requirement that the IRS places on write-offs. So is it necessary that a therapist gets therapy in order to run their business? I would probably promote that it's necessary for any business owner to get therapy because it's stressful enough and all that goes on with that. Off the top of my head, that's a good question. I don't know for sure, but I'll bet there's definitely a case that could be made for it. I'll say that. Next question, what kind of expenses can be categorized as deductible startup expenses? For example, I incurred expenses associated with developing a pilot service program before my company was incorporated. Would that be considered deductible? Absolutely. If you incurred these expenses in the process of developing a system or a program that you're planning on selling or marketing, yes, absolutely take the deduction, regardless of whether your entity was incorporated or not. Okay, that deduction is still valid to you and should be captured on, if you weren't incorporated yet, should be reported on the Schedule C of your personal tax return, because you started business, you were in business, you just hadn't been earning any income yet, but you were developing this process or this system. So yes. All right, next, what are your preferred accounting softwares to use when filing tax returns for clients? We use a tax software. It's a professional tax software system that's not available to individuals who are just preparing their own tax return. If you are set on preparing and filing your own personal tax return, I would recommend one. I think it's called freetaxusa.com. It's a cloud-based tax preparation software. I'm kind of just throwing this out. I don't promote, there's no promotion, no relationship between our companies. But they're one of the largest income tax filing companies. And I do have a good friend who used to be an executive there. And Free Tax Filing USA, I want to say, is what it is. And it's cloud-based, like I said, and is super affordable, super cheap. And in my opinion, does just as good of a job or better than some of the other off-the-shelf tax softwares that you might find at Costco or Walmart or whatever. So that'd be my recommendation to check out that one. All right. Any other questions? Doesn't look like it. So again, I want to thank you for participating today. This webinar will be emailed out to everyone, and will be posted on all our social media pages, Facebook, Instagram, and such. Uh, for YouTube, we want to just make you aware that there's other videos on YouTube that, quite a few that I've done where we kind of deep dive into entity types and S corps and all kinds of other information that might be of interest to you as a small business owner. So definitely subscribe there. We have these topic webinars, topic-based webinars every month, and then twice more a month we do just kind of open Q&A where I'll do a quick, here's some information, and then we get right to the questions. And we do answer all of your questions here on these webinars at any time you attend. So feel free to continue signing up and joining us again. The next webinar, I'm told, will be Wednesday, March 11th. And we'll be talking about how to make sure you're getting the most out of your tax professional relationship. All right, so thank you again. Just another quick pitch about Mazuma. We're all about keeping our fees low and predictable. That's why we do everything based on an all-inclusive subscription, flat monthly fee. Our target is the small business. We don't help big businesses. We're just not built to service them. And frankly, the small business owners are the ones who need the help. And that's where we positioned ourselves, is to open up a service to the small business owner that they couldn't afford otherwise. Handling all the bookkeeping and the taxes. Feel free to call us at 866-575-9100, or of course visit our website at mazumausa.com. Thank you, and have a good day.